We've also got Siddharth Purohit on the line with us this morning. Siddharth, to discuss those ICICI numbers. Siddharth, they're more or less in line. We did see a marginal uptick on the NPAs as well. So would you be worried about the asset quality picture at the moment, or was it more or less within your expectations?
See, if you see the bottom line number figure has been more or less in line with expectations, but that would be partly aided by the high other income, and also the provisions has been utilized from the contingency reserves to the tune of 800 crores. So bottom line seems okay. But if you talk purely in terms of asset quality, the slippages came little higher than what we expected, and after that, to considering a sell to ARC of close to 2,200 crores odd. So in pure slippages, number has been little high. Then secondly, if you look at the total slippages number, almost 50-55% has come from the watch list, what they had put in up to 44,000 crores. So what I believe is that other than your non-watch list accounts are also falling into account. So that is one point of worry. But what good part about management is that they have clarified that the non-watch list slippages of the total, one-third could be upgraded by the year end. So there is some relief on that. But overall, if you sum it up, then possibly the asset quality pressure seems will continue for a little more time. I mean, had it not been the ARC case sale, then absolute number of GNP would have looked much higher. So little concern over there on the NPA is still there for the bank. That's what I believe.
Siddharth, good morning. Beyond just the immediate quarter numbers, one of the issues that I have seen with banks, starting out with public sector banks and then now going on to some of the private sector banks, is that transparency hasn't been of the highest levels. And we all know that classification of NPAs can be done in whichever way. I mean, you can evergreen, you can not report, you can wait to report at some point. How much faith do you have about the quality, if I may, of the numbers itself? Which is there more dirt waiting to come out, or are you happy with the quality of disclosure at the moment?
See, the quality of disclosure has definitely gone up a lot in the last 2-3 quarters. Post AQR by RBI, the large accounts which were not reported as NPA were finally recognized as NPA. And though they were stressed, somehow they were not recognized. But RBI called for an AQR, and by that process, almost all banks, both PSU and private, had to classify them as NPA. So the bigger accounts and the troubled assets, the so-called large corporates, have been classified. Now the concern is beyond those 150 accounts. Now, whether the SME accounts, whether there can be a second round of AQR of similar process for the mid-size one, that's a concern. But if you talk about those 150 accounts, they were the large ones. So large part of them has been recognized. But if you say overall macro situation seems that, beyond those accounts also there is trouble for the SME and mid-size one, which is not part of the, watch list for your corporates, particularly for the private banks and PSU banks. So there could be some spillover from that. So while disclosure has gone up, definitely I agree with that. But even admitting that there is trouble also for the large corporate, the mid corporate can spoil the performance for next couple of years. That is what my perception is. But the large part of the NPA recognition seems to be now coming towards a end now. Possibly in few more quarters it should be done with. There will obviously be slippages in the regular course of business, but I think the large part seems to be over to us for the timing.
Okay, so what would you advise on the stock, Siddharth?
Actually, post Q4 result, we had an accumulate rating on the stock with a target price of 254, and it is trading already above our target price. But I think post this quarter result, there could be some knee-jerk reaction, and there could be some selling pressure, and in the medium term, the stock could remain range bound. So we'll possibly maintain our accumulate rating. We'll not upgrade it to buy immediately, and we'll watch out for more macro data and post possibly this quarter result. Looking at the all steel accounts and power companies result, we'll upgrade. But for the timing, I believe the stock will remain range bound till the next quarter result. That's what we believe. Looking at the outperformance it has given in the last 3 months or so.
Siddharth, ICICI Bank stock can also be looked at from another angle because they are going to do an IPO of their insurance venture, and we know that could be a significant valuation upside for ICICI Bank, not related to earnings. Have you kept that in mind in your calculations, that could perhaps build a pretty significant intrinsic value within ICICI Bank?
That is one part why the stock is also holding on. But when we consolidately value, already the valuations for your insurance venture is coming into picture. And obviously, when it gets listed, it will get a different valuation, possibly a much higher valuation than what it is quoting right now, because market will eventually determine the trading price for that. But a large part of that gets already captured in the current valuations. So while there is some upside left because of those, set of developments like IPO, but that is not going to materially change the valuations per se. So we'll look more towards the fundamental development and NPA issues rather than the secondary development like, IPO. That's what our take is.
All right, Siddharth, thanks so much for joining us this morning and taking us through your views on ICICI Bank post earnings. We've got plenty of other